Like I said, we're going to be talking all things Dequity IPO tonight. So before we get started, here's a quick look at the offer. Dequity Capital Management is looking to raise 657 million Jamaican dollars through an initial public offering. That's about 4.1 million US dollars. Dequity is a private equity firm that invests in companies across several industries, including healthcare, real estate, financial services, and others. They're offering just over 657 million shares priced at $1 each. 263 million shares are reserved, and the rest are available to the public. If the IPO is successful, the company plans to list on the main market of the Jamaica Stock Exchange. The minimum amount of shares you can buy is 10,000, followed by increments of 1,000. That means you can participate in this offer for 10,000 Jamaican dollars plus fees. That's about 62 US dollars. The offer opens on Thursday, November 27, and is scheduled to close on December 18. VM Wealth is the lead broker, and applications are being accepted through the VM Wealth IPO Edge platform. The link is in the description. And joining us now to learn more about this groundbreaking IPO is CEO of Dequity Capital Management, Kadeen Mairs. Welcome back to Taking Stock, Kadeen.
Hi, Kalila. Thanks for having me once more. I think this is the 15th time on the program.
And I have to say congratulations, because you might be the first entrepreneur to take two companies public, to list two companies, to grow from scratch. Grow from scratch and list on the Jamaica Public Stock Exchange. That's huge. Congratulations.
Thank you. Thank you.
The work ethic. The only other company I can think, maybe the Lascos.
Yeah.
You have the 3 Lasco companies, but it's still a different situation. Man, big ups to you. And I know you have some more coming up under your belt, which we might get to talk about a little bit tonight. So for those who are not familiar with Dequity Capital Management, what is it and how do you make money?
Okay, so basically, and this is a question that I get because for most of the companies that I've started in the past, they're pretty much straightforward in explaining. For example, dollar, we lend money. It's pretty straightforward. Private equity is probably something that is a bit new to Jamaica. And basically how I break down what we do is I use it similar. I'd use an example similar to persons who would go around and buy houses in great locations that need to be fixed up, and then they put them on the market. That's kind of like what we do with businesses. We look for good businesses that are run by great entrepreneurs. And what we do is we go in and partner with these entrepreneurs and we fix their business up. We look at the corporate governance, their structure, their sales, their back office. We give them the support that they need to get to the next level. And most times these entrepreneurs are aligned with us in terms of building a company that can be listed on the stock exchange. So we go in, grow them, provide the capital that they need, list them on the stock exchange, and that's how we make our money as well. That's one side to making money. Also, what we do is we actually provide financing to our portfolio companies, so we get interest income from that as well. So our main income is from gains, unrealized gains from our investments, or realized gains. And then we also get dividend income from portfolio companies when we grow them. For example, Dollar is a portfolio company. At IPO, the pre-IPO, I think we had 25%. At IPO, we sold down a percentage of our shares and we got down to around 20%. We maintain our holdings. We got back the money that we invested initially. And then what you find now is that we hold the company for the long term while we still give support to the company, and we get the benefits of the share price increasing, and we also get dividends from these companies.
Okay, so you invest in companies, try your best to grow them. That's the objective. And then at some point you want to exit. So you want to grow them so that you can sell at a profit.
Partial exit.
And then along the way, you also earn dividends and interest income from these companies.
Correct.
That's basically the structure. So tell us about the companies that you have in your portfolio now.
So basically, we have around 9 companies. We started out with a company called M24 Investments. I started that company when I was actually 24. Out of M24, Dollar was born. We sold that loan book over to Dollar, and Dollar focused on lending, and M24 focused on Cambio, remittance, check cashing. We had one location in Montego Bay. Now we have 2 and 1 in Kingston. So that falls a part of our financial services industry that we invest in. And of course, we have Dollar Financial that you know about. We're in real estate. We have a company called Johnston Development Limited. And basically, in that company, we focus on real estate, construction development. We just completed our first project, so we'll be seeing some dividends or returns from that development. And that was recently completed in Kingston, around 54 apartments. We're looking at other.
Where in Kingston?
1 Graham Heights. As you go up Graham Heights, you can't miss it. It's a very nice development.
Proper
Right?
uptown. Kingston 8.
However,
Kingston 8 or Kingston 6, one of them.
Kingston 6. However, as you know, Kalila, with everything with the hurricane, I'm from Westmoreland, so you know my family has been struck. Immediate, extended, my school is gone, everything is down, so we've been down there trying to give back as much as possible. But of course, this has led us to kind of be more focused on rebuilding and doing some housing developments down that side, more affordable housing. I think that's where our portfolio company will be looking at in the future.
That's great.
Yeah. So that's one. The beauty about it is we've already made the investment in these companies. They have proven their concept. You know, they have a development can show you sales and returns. So that's the development side of the business. On the healthcare side of business and telemedicine side, as you know, we acquired MD Link, and we also invested in 2 hospitals. We acquired Winchester Medical and Surgical in Kingston, and a private hospital in South called Royal Medical Hospital, and we merged them together. So basically, we have a hospital group now that we continue to look to expand. This is actually an area that I'm excited about because it's so diverse. The more I learn about it from the entrepreneurs that are involved, and it just creates so much diversity to Dequity and the industries, because as you can see, what's happening to companies, what's happening with the weather, anything can happen. And what you need to have in your portfolio is a company that is diverse, where when one thing happens, whether macro, whether it is natural disaster, whatever it is, when one thing happens, that company, even if one side goes down, it creates a spike on the next side. So that's another industry that we invested in. We invested in the insurance industry as well. We didn't buy an insurance company, we invested in a brokerage. So how they make their money is they get a percentage of each premium that is made. They don't take risk directly in the actual insurance and claims. So we're in that industry as well. We look to grow and see where next we'll take that company. We're in the outdoor advertising and print, of course, with a company called ECS. They do a lot of like any signage that you need to do. They're involved in that space. They are actually based out of Mobile. We recently expanded to Kingston. They took a little hit in terms of their covering, but all their equipments are good. And we're rebuilding quickly because the businesses in Western Jamaica, there are no signs. And, you know, the Prime Minister says he's looking forward to everybody that can to get back to business and open up back. So we're looking forward to helping companies put back up their sign, feel confident about their business as they did before. We had a small gaming business under the betting gaming and lotteries commission license, where we had a lot of small gaming units in different locations as well. So what we do at Dequity is we try to create a diverse portfolio of companies and companies that they have the potential to be listed, and entrepreneurs with the ambition. It's not easy, as you can imagine, Kalila, but it is possible. Our ambition is to, and I think I've mentioned this to you before, our ambition is to basically acquire 2 to 4 companies, and we want to list at least 2 of our portfolio companies, 1 to 2 of them each year. if we're able to do that, we're able to, as you can imagine, invest in 50 million in a company, growing it and able to get a 10x return. We can invest 550 million hypothetically, grow that value to 500 million, and at IPO that 500 million can increase as well. So that's the business model.
As you mentioned that, the last time you were on the show, let's line up this clip. Special. The last time you're on the show, this is what you told us. The next question comes from Philip, who wants to know, when is the Dequity IPO?
So I can answer this one. So for us at Dequity, we happen to have a proof of concept. We have all these portfolio companies. We have another acquisition to announce soon. So what happened is similar to MD Link, whether it's Royal Medical Group or Elite Concept and Solutions, all of our portfolio companies, the aim is always to grow them, build them, list them, and hold. But we have to prove that concept first. We've proved the concept when it comes to acquisition, but can we prove the concept in terms of having a blueprint to lead these entrepreneurs to their dreams of having a listed company? I mean, I've done it for myself, but have I done it for somebody else? Not yet. I mean, I've made promises to Chet and other entrepreneurs that I'll work alongside them to get them there. I think as soon as we can hit 2 consistent IPOs as Dequity, I think that Dequity can start looking at raising its own capital to continue to do what they do, which is, invest in SMEs and grow them to, be a listed company.
So that was, I think, last year. So you said you wanted to exit a couple of them before you listed Dequity. And here we are, 2025. You haven't exited any. So none of the companies have gone to IPO yet. Why the change? Why list now?
So, I mean, this is business, right? A lot has happened with a couple of the portfolio companies, and we wanted to give them a lot more support. We wanted to put one of the questions that portfolio company CEOs will ask us is why you want to list our company and you don't want to list your own company. That's a question I have to answer all the time. Like, so why you want to list me and you stay private? If it's so great, why you don't list yourself then, So I have to answer that question all the time. A next thing that we considered is, and even for the purpose of this IPO, we want it to be very strong for our portfolio companies. When I started to grow this portfolio, we basically did a bond raise for around 600 million. And we used that capital to buy all these portfolio companies. So we were carrying the debt on the portfolio company. Over time, what you find is that we had to be servicing this debt, even though we've invested in these companies. We don't want to pressure these companies or put them in a position when they're not ready, just because we needed them to exit. So what we decided to do was to put ourselves in a more patient position and wait for the right time to list the right portfolio company. So what this IPO does for us is, one, it releases any financial obligations that we have in terms of debt servicing so that we don't have to pressure the portfolio companies and we can pick the right time that's right for them and not necessarily just right for us.
So most of the funds that you're going to be raising, that you hope to raise, intend to raise, are going towards repaying that debt. So you have 626 million going to settle existing debt, 30 million for invitation and listing expenses, and just 1.5 million as working capital. Right. So for some people, it may sound like a lot, like, okay, you're going to use all this money to settle this debt, which is good because you're going to save a lot in interest payments. Yeah. But then how do you turn around and find money to invest in other companies? Because you do have a cash flow problem since you haven't exited any companies yet.
Correct. So what you find is that, and this is a question that I've gotten before, of course. What happens is that we had originally borrowed the money to make the investments. Now we have all these portfolio companies. What we need to focus now on, Kalila, is not necessarily acquisition, but actually focus on the portfolio companies that we have and look at the ones that are ready to be listed now. So that's kind of like our focus right now.
So of your 9 companies in the portfolio, how many of them are close to being ready?
I would say how we assess companies being ready outside of their back office and their corporate governance and structure, how we assess companies is their earnings. When you look to bring a company to the market, you approach a broker. They want to see your financial performance. Is your company, are your earnings enough to have a PE multiple that makes sense for you to go to market? So most companies, profit before tax, our ambition is to get them to 120 to 150 million dollars to get a valuation of 2+ billion, so that when they go to market, at least 20 to 25% of the company, they can raise in excess of 500 million. In terms of portfolio company or companies, and I mean, these are disclosed in the prospectus. For example, if you look at Royal Medical, Royal Winchester Medical Group, if you look at their financials, their earnings before their interest and taxes is about, I'd say, around 70. So if they were supposed to clear their debt, they would be closer to $120 million in profit. These are some of the companies that we're focusing on getting to the market in the near future.
So Royal, you said, is close to being ready.
Mm-hmm.
Any other one?
I would say Elite Concept and Solution, and this is purely on performance. However, we'll see how that business goes now that they're going to be getting ready for rebuilding after Melissa. We hope that they could take advantage of the opportunity they have to serve the community in terms of rebuilding and signage and stuff like that.
That's the digital advertising company, right?
No, what they focus on, Kalila, is these. Say you're opening a new location and you want money media outside. They have the machine that cuts those big signs out. They do have outside advertising signs, but that's not their main source of income. It's the actual machine that cuts all these big signs.
The big billboards?
Correct.
Okay.
Yeah. So that's a big side of their business. So I believe they have a strong potential. Some of the other companies need some work, but it's like kids, right? Some perform better in high school and some perform better in college. So if you ask me, I'd say those are the two companies that I kind of have my eye on now.
Within a year, you think?
Definitely.
So in the clip that we played, you were on with Che from MD Link. I noticed that their numbers are kind of up and down. They had a huge surge during COVID, and then after COVID, it kind of just dwindled. So what are the prospects looking like for them?
So MD Link has pivoted. A lot of people don't know that MD Link also has a company called Fleet Diagnostics, which is probably one of the few certified labs for like lab work, blood work, and that's a big side of their business. MD Link, based on discussions with the CEO, Che, the decision was to pivot a lot more from the numbers that they had was a lot more COVID related. The potential for the market now, you'll see partnerships with MD Link and Canopy is in the mental health space, kind of like what a company called Better Health in the States, where persons go online, talk to a therapist, especially now with everything that's happening, is to kind of pivot more to that niche market, while Jamaica gets used to, going online, speaking to a doctor and getting a prescription online. It's growing, but it takes some time. And they also have some things in the back office, accounting, etc., that they need to tighten up on. So we've been working with them on that.
Right. All right. So we have to talk about risk as well, because first of all, in the prospectus, like 8 pages dedicated to risk, scrolling and scrolling. And the business model is inherently risky because you're investing in fairly young companies, SMEs, aiming to grow them. In the prospectus, you say the investment philosophy is guided by finding business opportunities that are often overlooked or rejected due to perceived risk. So talk to me about the risk level involved in what you do and who this investment may be for, because maybe it's not for the timid of heart.
Correct. I mean, look, when you invest in when we buy into a company, and I don't want to single out any company, it could be any company at all. If taking stocks was a company that we want to grow, there's a lot of risk that you take when you invest in a company. You have the risk that's directly associated with the entrepreneur. The fact that the entire business relies on the founder of the business. You have to consider that risk. If that person is not there anymore to run the company, we run the risk of one, taking up the management ourselves, or trying to find someone to run that company. Two, you're taking on the risk of their back office, their accounting. A lot of companies that you invest in, one of their weak points is their reporting. Even with public companies, I see that all the time, where they can't get their financials out on time. So what we have to do is we create our own management team that goes in with our own accounting team and build out their systems. What we have to do is look at their legal risk, anything that could harm the company. So we would bring in our legal team. These are typical business risks, but what you have to know is that in our prospectus, we have to still highlight all the risks that are involved. If you ask me what investors this is for, what I always say to myself is, when I invest in a company personally, I invest in businesses that I understand. And sometimes even if the business is complex, I invest in the entrepreneur running the company. I invest in their ambition, their character, and their track record. So, I mean, it's an investor's decision. That's why we have a prospectus out there to read it and determine and speak to their financial advisor if the risk is in their appetite range. But yeah, it's a pretty... this business model is not common. It's very common in the States. You have companies that will buy 100 companies and they just need one company to go IPO, and that just blows up the whole company in terms of profitability. So it's a similar model here. Only difference is we put a lot more work, direct work, into these companies.
Let's take a look at your income statement, your income. So we need to talk about the numbers. Sasha,
Sure.
Please bring up the income statement graphic. And I want you to tell me what's going on here. So we see you started in 2020. So your company by itself, you're still pretty much a startup because you're only 5 years old, Dequity.
Right.
So that's another risk because you're still a startup yourself. But you started in 2020 with total income of just 51,000 US, grew that to 9.6 million in 2022. But since then, we've seen a fall off. So explain these numbers to us.
So I'm happy you brought this up, Kalila, because this helps people understand the business model very clearly. What you find is you will have segments where we're making 2 million US a year, and then you'll find that 2 years later we make 10 million US. Why is that? Because we'll probably IPO that company. The reason why you saw that 9 million in profit there, Kalila, is because we successfully IPO'd dollar, right? Building companies take time, but once you hit that mark with any other portfolio company, you'll see a spike in the profitability. And what you find is that you get a windfall of cash that you can keep on your balance sheet or continue investing or pay it out to the shareholders. That's how this business model works. It's not really a business model, Kalila, where you get up and watch for spikes every quarter, because we can't list a company every quarter. What you'll see is our performance in terms of steady dividend income, interest income that we would have been getting from these portfolio companies, but you're not going to see a spike every quarter. What you'll see is a spike every year, or worst case, a spike every 2 years.
You did mention in the prospectus as well that most of your cash flow, your income, comes from dividend payments. But right now, only 2 of those companies are paying dividends. And then the others, it's kind of because they're still growing. You want to nurture them. You don't want to take out too much dividends. Exactly.
You can't take dividends out of a growing company. It doesn't make any sense.
Exactly.
So what you do is you wait until because it defeats the purpose. If you're trying to grow their earnings, their return earnings, that they're a baby and you're taking money out of them just to pay yourself, right? Because you need to survive as a portfolio as the investor. We don't operate like that. So what you find is once like a dollar is paying dividends, or for example, M24, we have wholly owned subsidiaries like M24, which we control it. So we determine the dividend that comes over to us. And what you find is, for example, on the real estate development side, that company will get windfalls of cash each time that they complete a dividend, and you expect that some of that dividend will come to us.
Right. It can be tricky to manage, but you guys you're making it work. I definitely understand. Now, one thing I did wonder as well, when I saw, the numbers, how much money you're seeking to raise, 657 million, I think it
Yeah.
is. Why list on the main market? Because that's below the junior market cap.
So what happened is, because we've invested, and this is something that, we spoke to the stock exchange about, but how it works, Kalila, if you have a company that's private, if you had raised, for example, $300 million and in capital or in equity in that company before you go to market, when you go to market to do the IPO, they will subtract that $300 million from the 750 that you're able to raise.
Oh.
Yeah. That's something that is not very well communicated to the public or to persons who look to list. But that's something
that caught you off guard too?
It didn't. We were aware of it. We did see the risk in that. But the beauty about Dequity is we're a St. Lucian company. So we don't pay taxes on the dividends or capital gains anyways. So the same benefit that we would get on the junior market, we still got it on the main market.
So we mentioned dividends as well, and how Dequity makes money from dividend payments. And if investors are to buy into this IPO, they may expect some level of dividends. What is the dividend policy?
I think the dividend policy stated in this is around 60%. But what I want to add to that is, and this is another thing that, like, investors, even when I was running other companies, we have to be very cognizant of. Not because a company states that there's a dividend policy, not just my company, any company, that there's a dividend policy. A policy doesn't mean that that's what the company has to pay. Most times they'll state a dividend policy and then they'll make it clear that each year the board of directors will look at the performance of the company and determine if a dividend will or will not be paid.
Right. Looking at the investments that you've made in the past 5 years, prospectus says you evaluate 10 to 15 opportunities per year. You close 2 to 3 transactions per year, average investment of about 500,000 US. For entrepreneurs watching this saying, Dequity is investing in companies. How do I get them to invest in me? What do they do?
Again, the market isn't as sophisticated as I would like. There aren't a lot of places. For example, in the States, you have even websites that you can go on to seek investors. There's a structure for companies from pre-seed to seed. They have VC companies. They go up. They sell them to private equity companies, and they have this whole system. We're getting there, but slowly. I'd say most of the deals that we get are from referrals or from us seeing the performance of a company and reaching out to the principals of that company. Those are the two main ways. I still personally have people who reach out to me, and I'll have them send me a pitch deck, whether it's on LinkedIn, Instagram, or through Dequity directly. But what we want to create in the near future is a standard place where investors can meet businesses and potentially get, whether it's equity or debt. So that's something that we're working on now.
Where do you envision Dequity in the next 5 years?
So Dequity for me, Kalila, is like highly emulates Warren Buffett's Berkshire Hathaway.
One of our viewers said that. Sounds like Berkshire Hathaway.
So there are a lot of philosophies of Berkshire that we're going to directly implement in the business, which will be very new. But in 10 years, Berkshire has hundreds of companies, right, Kalila? And not, if you look at some of them not doing well. But that is the business model. It's like me doing the loans business, and some loans doing well, some not doing well. But what you want is to know that 8 out of 10 is doing well. And it's kind of like what you want to do here, where in the reverse, if you have 2 of them doing very well, you're doing great financially. So in the next 10 years, if we're at 10 portfolio companies now, we want to start to move at a multiplying effect. Hopefully, if we're able to acquire 4 per year, that would be how much? We'll be at probably 40 companies in 10 years. And hopefully we'll have probably 20% of that listed on the stock exchange.
All this at just, how old are you now, 34?
No, I'm not.
Imagine when you reach
Long
Warren
time.
Buffett age.
Long time. I'm past 34 now. I was in the last interview. I'm 36 now.
Oh,
Look,
I'm
you
not
said
34, I'm 36.
these standing out are gray hairs.
With his baby face as a Jamaican Warren Buffett. So imagine in the next 30 years where you're going to be. I mean, amazing things coming from you, Kadeen. I just wanted to point out as well. So Dequity's net asset value, according to the prospectus, is $1.24. The NAV is typically something that we use to measure the value of companies like yours, investment companies, holding companies.
Correct.
So $1.24 and your share price is $1. So we're getting a discount.
Yeah. Let me say something regarding that. Because of how the market was kind of down. Yeah, we took like a 30% discount to make it attractive for the investors, so they buy in and get an upside based on the net asset value. But what I want to add to what you pointed out, Kalila, is the net asset value that you're seeing. The net asset value at IPO will increase because most of the money is going towards clearing debt. So that's actually an upside for the investors who value a company based on NAV.
Okay, good to know. Anything else that you want to mention before we go?
No, I mean, look, I'm happy to be on the show. It's a very tough time now to be in the market. We're very cognizant of that. Tonight's a tough night for the viewers. Jamaica is playing one of the most crucial matches for the world. Well, the most crucial match for the World Cup qualifiers.
Yeah.
But yeah.
And half of the country still doesn't have electricity or internet on top of that.
Yeah. Can you imagine them missing the game and just being in the situation that they're in now? So again, my sympathies to my family, friends, to everybody in these parishes affected, and we're going to build back Jamaica and build it back stronger. And the IPO is next week, Thursday. Subscriptions, it opens at 9 a.m. So we encourage persons to apply early, and let's see how we can grow together.
One Coco said, it's good that the micro market will come. Kadeen can list all those small companies, keep working hard. I don't like that Dollar is not under his management anymore.
Well, Kalina, I can say something with her. What One Coco said. One with the micro market, I'd say that, I mean, we had discussions with the stock exchange regarding the micro market, and trust me, that would help a lot, because instead of aiming for these high earnings numbers, because you'll have companies that are very good, Kalila, but they're making like $50 million a year. All they need is the push of some equity and what being a listed company offers for them to get to the next level. So the micro market actually will be a good thing for those companies. And in terms of Dollar not being under, I'm not running Dollar anymore. What I'd say is that I'm still a director on the board. I still steer the ship some way, and I've still maintained my holdings in Dollar. And now I'm the majority holder of this listed company, so I'm not going anywhere.
Okay, good to know, Kadeen. Thank you so much. And to our viewers, if you like what you hear, you can apply for this IPO via VM Wealth's IPO Edge platform, and the link is in the description. That's Kadeen Mairs, CEO of Dequity Capital, the 36-year-old taking his second company to market in less than 5 years. On top of that, doing big things.